Hi, everyone. It's Wednesday, and my name is Gail Cantonis. I'm with Keller Williams OC Coastal Realty in San Clemente, and I'm excited to be here today, not only because it's Wednesday, which is my favorite day of the week, broker preview day, but I'm also here with the Christian Brothers Lending, and they are friends of mine, and they're also in my office, and they're experts in this market area, and so I wanted to introduce them to you because they're friends of mine, and so they can kind of enlighten us about what's going on in today's market. So Scott and Steve, welcome. Thanks for joining me.
Thank you. Glad to be here.
Thanks
You're
for having
welcome.
us. We're excited to be here and see if we can enlighten a few folks on what's going on and how to prepare, and whatever questions you have for us, let us know.
Well, I'm on the beach, see, so.
Hey, I see that.
Are we all?
I'm supposed to be quarantining, but I guess I'm not following the rules, but hey.
Hey, you're social distancing, that's for
That's
sure.
right.
Yeah.
We're far enough away. We're 6 feet away.
That's
I
right.
do have a few questions to ask you because I have a bunch of people that have asked me questions, and I said, let me put that to the expert. So I'm going to rattle them off, and if you can help me out, that would be great. Okay?
Perfect. Love to see what we can do.
Okay. So the first one is I want to pick your brain, and I want to know your thoughts on the housing market and the quote unquote pandemic that we're experiencing right now. Is real estate still a safe way to invest our money? Is it any less volatile than the stock market? I mean, I've been watching my 401k dwindle. So I'm kind of wondering, and so are other people, should we still invest in real estate?
I'd have to say absolutely. Yeah.
Yes.
Yeah.
Why?
Yeah.
It's
Well,
still your
here's
safest market, but go ahead, Steve.
Yeah, I think the biggest reason, and this, when we start talking rates and stuff, that's where Scott probably will have more to say. But
Okay.
I think still feel confident that it's a good time to buy. Especially, I mean, it's never. I don't think it's a good time to be a renter. I do think it's a much better time to be an owner, and I think the benefit of what's happening is the buyers. If this didn't happen, you were going to have a very difficult time getting into a property because there were so many buyers and so few inventory. Well, now that inventory is half, but there's a lot fewer buyers and there's a lot fewer purchase transactions happening. And the buyers that are taking advantage of that right now with the low interest rates, even if an adjustment in the market happens, they're still going to be saving thousands over the life of the loan of buying now.
Okay.
I was also listening to one of the sharks. Remember Barbara Cochran from Shark Tank, and she was on Good Morning America the other day, and she was saying exactly the same thing. She was saying, no, it's still a good investment. It's still a good time to buy. I believe there's areas for that might see some adjustments, but I think a lot of the areas, especially the areas that you're working in here in San Clemente and Southern California section, especially coastal, you're not going to see any. Now's the time you need to jump in, or you're going to be fighting with other buyers. And when the market opens up, because when it opens up, they seem to think that everything's just going to go back to where it was, which it was a pretty hot market at that time.
Right, and then there might be multiple offer situations where you're kind of then increasing the price of the homes, and so then you're kind of back at, well, there goes my low interest rates. So, Scott, so can you allude to, I know you can't really quote rates, but can you give me an idea of what the rates are looking at now for all types of loans, jumbos, VAs, like what are we looking at?
I mean, we have seen some fantastic rates through this year and last year, and more importantly, even just recently with what's going on. But they are still. I mean, realistically, we're still in the 3% area. I mean, 3.5-ish range. Depending on the type of loan that you're looking at, but. And I don't think that's going to change anytime here soon, especially with everything that's going on. So I believe that now is definitely a great opportunity, because with rates being so low, your qualification for affordability is so much greater, right? So
Yeah,
you can,
at the same time, there are some there. If we're looking at a high balance loans and we're looking at jumbo
yeah,
loans, we're having some difficult times with those because of the lenders are feeling like. Here's what they feel like. They feel like when we come out of this, we're going to see some. We might see some lower interest rates. Those high balance loans and those jumbo loans are the ones most likely to refinance. Now, when
Right.
you when a servicer takes on a loan, it typically takes them 2 to 3 years before they return a profit from that loan. And when that person continues to refinance, that hurts the lending industry in a whole. So
Right.
they've brought pricing, and it's not so much that the interest rates are so much higher. It's just that there's very little margin, so there's a cost to the borrower to get that product right now. But we had a conversation with a gentleman this morning regarding very experienced in the market and what's going to happen and where he sees after coming out of this what's going to happen with those jumbos and the high balance, and he sees that that's going to open right back up. We're going to be right back where we were at. So we do have some Band-Aid loans in the meantime where you can do a first and second combination and get
Okay.
yourself a nice conforming loan on the front end. The interest rates are very good on a combo loan. I think there's only a 50 basis points cost to have a first and second combination, gets you to almost 90%, 89.9%, and
Okay.
you can still be doing your jumbo loan. So a lot of that seems to be the Band-Aid to fix that.
So let me ask you this. So if I was gonna help a client of mine write an offer on a home, and we had to fill in the loan contingency portion, could you tell me what it's looking like now in terms of actually getting the loan? Are we needing more than 30 days? I mean, how are the banks doing? Are they just, inundated with those refis pre-COVID-19, or like, what's your timing like?
Everybody's different.
Yes. Yeah, depending on the bank and the company that you're going with. I mean, quite honestly, SunWest is the bank that we work out of, and
Okay.
they are hitting timelines on purchase. So, and we are in the same path that we were prior to the Corona epidemic. So
Okay.
we're still closing
We
loans
might-
on time.
We might be 3 to 5 days slower
that-
at the most on a
Yeah,
purchase
we
loan.
might.
Yeah.
But what that means is that 30 days is still doable. Now, would we like to ask for a little bit more time? Absolutely, because even though we as our bank are doing great on timing, we have third-party vendors that may have issues, right? We have escrow
Okay.
that you have to work with, you have title, you have to work with
Sure.
appraisals. So that's the only, unknown to closing it on a quick period of
Right.
time.
So now with all these purchase agreements, we have the CVA, the COVID virus amendment, which helps protect a buyer and a seller for those reasons. So that's good. So it's good to know
Right.
that if we need it, we have it. But it sounds like you guys are kind of on track to help our buyers and be competitive, which is good, which is what we like. So
Well, and let me add to that, because there's one thing that's special that we're doing that a lot of other banks aren't doing. First off, the broker world is having a really difficult time because a lot of the lenders are kind of stepping away from the wholesale side, which is where the brokers get their money, and spending more of theirs on the retail side, and they're jacking their prices up. SunWest, who's a big leader in the wholesale market, has done just that. That's why we're able to still close loans fast, because we're stealing from the wholesale side for our,
Retail.
to handle the volume of loans that we have. At the same time, most of the companies, because of how long it's been taking and some of the unknowns, they're not allowing for locks. A lock,
Okay.
when we lock in a loan, so if your buyer says, I want to buy today, and he's afraid, you don't know what that interest rate's going to be when they close, well, we can still do forward locks. If they're out shopping, we can still do pre-qual locks, and very few lending institutions are actually doing that. So I think that's probably one of the biggest pluses as well.
Yeah, that and also the fact that yes, we can lock, and not wait till funding, which is what everybody else is doing. But we also still have credit scores that are still haven't changed, where a lot of lenders have now decided that they don't want to go below a certain threshold of a 640 credit score or something of that nature, we are going still way below that in qualifying our borrowers. So that's a huge,
Huge.
for a lot of buyers, new buyers coming out.
Let me ask you this question while we're on that, along that same vein. Does it make sense for a buyer right now in this market to shop their rates?
That's great. You know what? Absolutely. You have the opportunity to take a look at, 2 or 3 different lenders, and I always tell my clients to, use whatever I provide them to do just that. I don't always recommend that they go out and have their credit ran 2 or 3 or 4 different times.
Right.
But if they were to take the information that they were provided from one lender and show that to another, absolutely do that and make sure that you are being competitive or getting the most competitive pricing. And I've been doing this for over 30 years, Steve and I both, and I can tell you that 9 times out of 10 that whatever somebody else has been offered, we have the ability to generally beat that.
Okay.
So,
but the other big thing on that though is make sure you're shopping apples to apples. I mean,
correct.
it's like it's not, there is a difference in
program.
in the person that you deal with. It's different that they understand your whole financial picture, they understand your goals, and on top of that they can actually perform and close on time. Because if you're putting $10,000-$20,000 up as a deposit and you release your contingencies, and at the end of the day they're a broker and that lender just shut their doors or went out of business, and then all of a sudden you don't have a loan. Well,
yeah,
if they've released contingencies, they don't have their money either. And one thing that we do is we'll guarantee that with a forward approval. So we basically get the borrower approved up front, and SunWest is the servicer. They are the lender. It's their money that they're lending. So
okay. Nice. Yeah. Okay, good. So with that in mind, let's talk about what's going on right now with the whole the COVID-19 and the issue with people not being able to pay their mortgage. So I wanted to ask you a question. I have some people that are thinking about buying, thinking about selling, and we're just still answering questions about, well, what do I do right now? For example, with the whole the option to do a forbearance with current mortgages and not being able to pay and pushing off, deferring those payments off for a few months. There's a lot of confusion with homeowners in terms of, do I have to pay that in a balloon payment at the end of month 4, or can I tack it on to the end of my loan? Will that affect my credit? What do you guys know about that?
I love to jump on this one.
Yeah, go ahead, Steve. This is the talk.
I've been living this.
Good.
Yeah, from everywhere. Go ahead.
So I've not only I've called lots of lenders. They're all different. Just so you know, a lot of them have different servicing agreements. I think SunWest has one of the best servicing agreements where they allow the homeowner to skip some of those payments. There's the issue with that is, and the way Fannie and Freddie and Ginnie and the guidelines are still remaining the same, and this is confirmed, they're not changing their guidelines on the forbearance, right. Which means that if the homeowner enters into a forbearance, they cannot get a loan. They have to be 12 months behind when they've settled that forbearance before they can finance for a new loan. If they go into a forbearance, they still owe that money. So if they decide I just don't want to make a payment for 3 months, and they've got a $3,000 a month payment, month 4 they got to pay $12,000. They're not going to refinance their way out of it. All they're going to have to, the other option they're going to have is to sell. So if they go into selling the home, that's great. But now they're going to be a renter for 12 months from when they've settled that, because they're going to have 12 months behind that forbearance before they can repurchase.
Wow. Yeah. I guess it's just interesting to me how you see like the government saying like, okay, don't pay it for 3 months, but in month 4, you better have that 9 or 12 grand, whatever it is, it just seems unreasonable.
Well, the fact that the government did that is here's the crazy thing, is the government jumps in and says, hey, we're going to do this. Those servicers who service those loans, again, remember how I said they don't really make a profit until year 3. Mm-hmm. So those servicers who have all these loans, they have a contractual liability to pay the investors. they don't get to not make the payment. So if you have everybody on the planet right now, because they don't have to qualify, that was the other thing that came out. They just have to say, I was affected by COVID, and they can
Right.
get themselves a forbearance. Well, they don't make that payment, the servicer still has to make that payment. So Ginny, who has lots of money, which services your FHA, your VA, and
Right.
your USDA, they said to the servicers, well, when you run out of money, we'll replenish. So you can apply for replenishment, we'll replenish. We don't have that from HFHA for Fannie or Freddie. And just remember that in the crash, the last crash, Fannie and Freddie went into conservatorship with the government. Well, the government never took them out of conservatorship. The government basically owned them, has been profiting more money than Bill Gates profits off of Windows. I mean, they're profiting billions of dollars, and they have paid back zero on why they took them on their defaults in the first place. And now if they would have given back maybe 6 years ago, Ginny and Fannie and Freddie would have more money than Ginny would to help protect these servicing companies, and which helping the servicing companies helps the borrowers execute, and it helps a friendlier guideline, I would say. But at the end of the day, I think it's kind of a cluster. So HFHA is going to have to get involved, which basically it means taxpayers going to have to pay.
Right.
So to take it to one step, here's the thing. You go in, you contact your servicer, and you ask for this forbearance, right? You're getting, what, 3 months, let's just say, to not make your payment. Well, as a refinance, and I say this because this is the industry that I'm in, you can refinance your home right now, probably lower your interest rate, at the same time pull cash out that you may want to use for reserves or for paying off other debt or whatever, and still skip up to 2 payments at the same time that you do the refinance. We could schedule it so that you can actually skip 2 payments where you're skipping 3, but yet at this same time, you're still setting yourself up for the future that you can do other things with that money and not be stuck now in waiting 12 months before you can do anything.
Right.
Yeah,
in your
because
life.
the money's not free. You're buying it's better to buy yourself some time by
Right.
doing a refinance than it's going to be to go into debt to
Absolutely.
your own lender.
And pay yourself.
Yeah.
Because basically, if you're refi, you're still going to likely have some equity depending on when you bought, and you're going to just be paying yourself or just borrowing from your own money instead of owing money, who knows, plus interest likely. But it's good that it's good to educate everyone and let them know, because, and I also remember a conversation we had previously where you do everything you can to avoid that forbearance and maybe get like a separate HELOC or something from those credit unions that are offering cheap money to kind of bridge that time that you can't afford it. So that's an option as well, as in addition to what Scott said, the refi. So
right, pinfed.org has a great program. They'll give up to $25,000.
Right.
PENFED. Right.
Good. Penfed.org. Okay. Perfect.
Good.
And then I have one more question. It kind of was getting hot and heavy there with a little bit right prior to the whole COVID-19, but it was that whole deal with the iBuyer programs. And for example, Zillow has an iBuyer program where they just offer a seller a price for a home, and then sight unseen, and just the seller would be like, okay, I'll take it. It's a lot easier for the seller, but then there's so many so many cons as to why you shouldn't even use those programs, because you have me, of course, and you guys. So, but there's a lot of other financial reasons why. Do you want to explain to everyone what's wrong with the iBuyer program and what's happening with those?
Well, first off, the iBuyer program only works in a positive inflation market, when the market's continuing to go up. And right now, with unemployment at, I think there's 10 million people unemployed right now, the iBuyer program basically backed out. And here's what they did: is the CEO of Zillow got on online, and he said, well, we're backing out of, not only are they backing out of the iBuyer program, they're backing out of their commitments that they have with the individuals for the iBuyer program. So all of these sellers who were in contracts on their new homes, getting ready to close, going through these transactions subject to the iBuyer program settling them on their home no longer exists. So builders are upset because the Zillow and some of the other ones were out, selling the builders on, hey, just send them to us and we'll sell them. And the iBuyer program is lousy because first off, they use false comps. Literally, the people are selling their home 25% below market on average. They're telling them fees that aren't real. They're charging them what the realtors are charging anyways, but they're just bearing them in all these different fees and in their equity. So at the end of the day, when the borrower would go to an iBuyer or go to one of these easy deals, that's fine. The only thing they're saving is the fact that they don't have to show their home to prospective buyers, but they're actually leaving so much money on the table in doing so. It doesn't make sense. So they're out of the market anyway, so we're not dealing with them. It was just a lousy platform.
Yeah. Oh, good. Well, I'm glad they're gone for now, because I feel like real estate is still going strong. It's a balanced market. There's, the same level of supply and demand, so it's kind of balancing out. And I'm excited today. I had a client, I wrote an offer for a client for purchase a home. So people are still wanting to buy homes during this time. So I'm excited about that.
Our bank, we had a conference call today, and we are having one of the best months of the year, maybe of 2 years. So it's out there. The business is out there, right? To be had. And I'm not talking about refinance. I'm talking about
we're doing a lot of purchases. Yeah, we're doing a lot of purchases.
So I'm doing probably we're probably doing as many or more purchase than I am refinance. So the business is out there.
Well,
but you can't be out there. Nobody can go out.
Well, the fact of the matter is people have to move, right? Case in point, the family that's the seller of today's home, they have to leave. They have to leave the country because they lost the job. So it's just the situation of current, situation of the world, and it's unfortunate, but people have to move for work, for school, to be in your family. So that, life still goes on, and we just have to try to function within the pandemic. So.
And sellers need to know that they don't have to have people walking in and out of their house to sell their home. And now is still a really good time to sell their home. I mean, we feel like, out of that 10 million people who are unemployed right now, 70% of them are going to go back to their old jobs as soon as they pull the quarantine. So you got 70% going back. You're going to have 30% who are going to be out looking in there. What's that going to do? I don't know. If a lot of people go to do these forbearances, who knows what the market's going to be down the road. But again, rates are low. If you're a buyer, it's a good time to buy. If you're a seller, inventory is low. Get your home on the market and sell it virtually, because that's how buyers are doing it. They're not viewing the home until the end, and then they're suiting up with their gloves and masks and walking through and not touching anything. I think it's a great way of doing it. Inspectors are still doing inspections, and appraisers are still doing appraisals.
For sure. I mean, virtual tours are available. Today, there's disclosures now that buyers and the buyers have to sign to go in and make sure all the security and safety precautions are taken. So we gloved up, suited up, hand wipes, everything. So it's possible, but we do want to make sure we limit that in-person viewing unless they're, have seen the virtual tour and are ready to go in and say, hey, I'm serious about this house. So I understand from a seller's perspective as well. But anyway, I just wanted to give you guys the good news, and everything is great out there. I mean, health-wise, everyone. I appreciate you guys stepping today to enlighten everyone, and hopefully they'll reach out to you guys with any questions, and me as well.
Sounds great.
Thank you for having us. Appreciate it.
Do you guys have anything else?
Yeah. Anybody who has a loan? Yeah. How about you? Anybody? If you have a loan, if you need a loan, give us a call. If you want us to leave us alone, give us a call and let us know.
Yes.
Same here.
Stay safe. That's the key. Stay safe and stay home.
Yep. All right, guys. Cheers.
Cheers.
All right. Bye.
Take care.